There's a feeling in the air this past week or two, and it's not just the cool nights and kind of the coming of the end of summer. There's also this feeling of a sense of urgency that's kind of hitting the real estate market. So that's what we're going to talk about this week at Simply Des Moines Market Values. So sit back and join me. Hey there, welcome to the show. It is certainly a feeling of urgency coming out this past week or two, and I think the stats are kind of showing that. So, what I try to do with the market stats every week is, we kind of look at the same numbers and the same graphics, but what I try to do is pull the nuances out of what's maybe has happened or what is happening in the previous weeks. And so, that's kind of the focus. So let's take a quick look here this week at why I think there might be a sense of urgency in the market. In the meantime, thanks for tuning in. Again, if you enjoy the content, please do me a favor and subscribe to the show. Hit that notification bell and hit the subscription button. That way you'll know when new content hits the streets here for you. So, all right, let's jump in. So we're going to start off first of all here with a graphic showing you the history of our sale pendings going back to 2019, and it actually goes back, much longer in my database. But what you kind of see here is this normal rise and fall and peaks and valleys. And of course, in 2021 here, this was the year that COVID really put us into crazy mode here. That's the year we had just under 46 or just over 4,600 homes under contract at one point in time, which was just crazy. And you can see we're nowhere at that level anymore. But what I wanted to show you here was the kind of the difference between the highest and lowest pending sale levels that we've hit this year. So our highest level so far this year, we were at 2,483 earlier this year, and it took us back 308 days to hit that number. And why these numbers don't maybe not may not seem too important here, but when we look at this at the for sale inventory, you'll see quite a difference here. But 308 days is how long it's taken us to hit the highest number, which is pretty consistent with last year. We had a little more than that last year, but not too many more. The number of low homes, the fewest number of homes currently under contract, started off each year. We were 1324 a year ago, and 1365, 364 days later. And this was January 1st, basically, of both years. So we start off our years, these last couple of years, at our lowest, and we've gone up consistently. And that's pretty consistent when you see year over year, with the exception of 2022 and 2021, when we were artificially raised due to the COVID numbers there. But what I do want you to pay attention to here is this last little tail right here. And I don't have it enlarged, but you can kind of see that this last little tail here is actually starting to come down and trail, not necessarily up. Maybe my drawing here is a little bit exaggerated, but it does show the signs with the lower rates of interest here that sale pendings are starting to pick up a little bit, and we aren't seeing that downward trend. We're starting to see this maybe a leveling off, and that would make me nothing happier than to see sales continue to level and then continue to rise, or at least stay level through the end of the year. That would make this year end much stronger, because you can see we ended it last year almost right where we started the year at 1365 here. And if we can stay anywhere above that, that's a good sign that the market is changing. So let's take a look now at the number of homes for sale. Now, this is the inventory levels going back all the way to 2019 again. And again, this shows a whole different story. 2020, COVID hit. Oh my God, what's going to happen? Homes started to come back on the market or stay on the market. We had a slight pause of about 2 or 3 weeks, and then everything just started selling. And that happened all the way through 2021 with our inventory levels. And we didn't start to build inventory again until somewhere around the summer of 2021. And we kind of got back onto this normal level. If you think of this as an EKG, we kind of went into shock here. And anyway, we kind of reset our rhythm of the market here. And what you've noticed here is that we are back on the rise again this year. And so remember the pending sales, where it was just a previous year when we hit our last high. it has actually taken us 1,715 days. That's 4.5 years since the last time we've actually been at this home inventory level. And that's a pretty cool number to be at right now. When I talk each week, I say sometimes it's not just the fact that more homes are coming on the market, which they are, but it's the pace of sales. When we don't have as many homes going to contract, that also increases inventory. How many years has it been since we've been at this low, or how many days, I should say? It's been 252 days since in this year since we were at our low. We were at 2727 about the middle of spring or late spring there of this year. And it was a little bit later in the year we were at that same level last year. So you can see that inventory, while it's growing, it did take us 252 days to come to that low number from a previous year. So this is really the most important one, or the most impressive stat I can tell you that we're going to see all week this week on this week's show. Some other signs that we're seeing that maybe there's a sense of urgency here. You've got the price reductions, which are continuing. This one we've seen consistently. Again, there's only been 3 or 4 or 5 weeks here this year that we have not surpassed our price reduction counts. And it looks like we're on the way to do that. The one thing I want to point out right here is look at this last year's numbers. We're actually coming into what I'll call price reduction season. We'll hit that sometime around October probably here. And that's when we'll hit our high number of price reductions. And they'll continue for about a month, tailing off a little bit, but they'll still be at a pretty good clip there for about a month until we get near the end of the year when everything kind of just naturally slows down. So this is kind of where we're going to be. We're already seeing more price reductions. It's not inconceivable that we'll see a week or two that are over 500 home price reductions in our marketplace if we follow this same trending here. So we'll watch this as the year comes on. As far as price increases go, they've been pretty slow throughout the year. We have seen a couple of spikes. Again, these spikes are typically where builders come in and they adjust their pricing for the year after inventory costs have changed and maybe supply issues have played their parts. But you can see that we're going to see probably, according to last year, we'll see a couple of spikes again before the end of the year. Sometime around late October, early November, we'll probably see this one spike again. We'll have a week where we see pricing kind of reset for the next year, and a couple more spikes before that, before the end of the year. But for the most part, I don't expect to see a lot of price increases other than those annual adjustments we'll see due to increases of costs. Open house, existing homes and new homes being held open. This is not the traffic. This is the number of homes actually being held open. And you can see, look at this right here. We're seeing, the early part of the year, we weren't even hitting last year's numbers. Then it was kind of bubbling along there. And it wasn't until summertime we started to see the open house traffic really start to change. And we're starting to see more and more open houses being held each week. It's possible we'll see a 1,400 open house week. We're currently at 1,196, so just under 1,200 this week. And if we continue the same trending here, again, if we say extrapolate that on out there, we could see a 1,400 home held open this week. Now, the kind of the impressive number here is that almost 1/3 of our inventory was held open this weekend. So, we've got more homes on the market, but when you see this almost 33%, 32% of the homes inventory being held open this week, that's a pretty good sign that the marketplace right now is starting to feel a little bit anxious, and maybe that urgency is starting to kick in. Another side that really comes into play as we go through the year is following the number of homes that come on the market. They go into contract, and then for whatever reason, they fall through. The sale falls through. And we had 58 homes this past week that fell apart. The sales fell apart. We don't know how many homes, where in the process they went under contract. They could have been just last week or 2 or 3 weeks, but overall, 58 homes this past week came off of the market. And while that number is, a little bit distressing, that's equates to about 36% of our inventory this past week or sales that, not inventory, the number of homes that were under contract that actually went back off the market. And if you look right here, this is a track that I've started to add here earlier this year. You can see that the light dotted line here, it's kind of hard to see in the graphic. It's this one right there. That is 2023's average. We were averaging across the year 24% of our inventory was falling apart. The sales were falling apart. Currently, again, like I say, we're at 36%, and so far year to date, we're at 27%. And that's that darker line. In fact, let's just kind of highlight those. Do download this graphic. I've got both graphics on here with and without the markups on there, so you can kind of see that a little bit better. But this number here, 27%, has been inching up all year long based on higher home sale fall throughs. So that's also going to be a sign as we move into the end of the year that maybe we need to tighten belts and make sure that the homes that are currently listed are in their best possible condition. Sometimes homes fall apart because a home buyer, for example, maybe they don't qualify after they've started the process. Maybe something happened in their jobs or their lives that caused them to fall apart too. So, well, they're bound to probably fall apart too. Uh, Okay, homes listed per week. Another area we kind of watch. You kind of noticed here that all homes for sale listed this week by over week has been on the increase. We're kind of going to continue this same path here, probably through the month of October and early November till we get the last 2 months of the year when inventories, homes coming on the market kind of trail off. But we're kind of bubbling right along where we were last year, a little bit above, obviously, but not too far there. 322 new homes came on the market this week. The median pricing of those homes is staying pretty steady, where you can kind of see there's usually a week or two where it goes up or down a little bit, but we could really expect this pricing to kind of stay pretty steady the next couple of weeks if we're going to follow last year's trends before we start this downward trending to the end of the year. So just a couple more weeks of maybe holding these list prices up until maybe we do start to see some relief in the list pricing year over year. As far as pending sales go, this is the number of homes in pending process. Again, we're trailing behind last year, which is those little dotted or dashed lines there, but they're pretty consistently behind. It's following along kind of that same trending, just slower than last year. And what this is going to tell us is that if we had 160 homes went under contract this week, and we continued this process down, as we get into the month of October and November, we could actually, see around 100 homes only going under contract week over week, and that's again going to affect the marketplace. Now, where we'll watch this number is again, if with interest rates coming down and the Fed supposedly going to be making a statement this week or next week and talking about the Federal Reserve numbers, which will indirectly affect mortgage rates. Will these sale pendings then try to come back up? And I would say that we have a strong chance here in a couple of weeks of seeing these sale pending numbers outpace last year, which would be the first time, with the exception of this one little week right here, where we, outpaced. It must have been right after the 4th of July. Yeah, week 24, 25, 26 would have been that week of the 4th of July. People got all excited and bought some houses there extra there. So we'll watch this and see if we outpace the end of the year for sale pendings. Another area that's causing a little sense of urgency. We have a seller's market, a balanced market, and a buyer's market. The seller's market is where we are below 4 months of inventory where we have been and currently are. We've been in that all except for 3 weeks earlier this year, the first 3 weeks of the year. But we're right there knocking on the door at 3.9 months of inventory. We're knocking on the door of being in a balanced market. And that's where we have more inventory than we're selling. And there's nothing wrong with a balanced market, okay? Don't get all freaked out that we're getting into a balanced market. A balanced market is actually healthy. That's where we have the right number of homes for sale for the night, right number of buyers that are out there. But basically, in a seller's market, the sellers are at the driving control here when they have they have a little bit more of an advantage. You can see that we typically see this number rise or this inventory rise, and we were actually last year in a balanced market for the last 5 or 6 or 7 weeks of the year. So basically the last 2 months of the year. But it's entirely possible that, we could be in a balanced market beginning as soon as next week if things continue the way they are. So this could actually, create a little bit more of a frenzy if you've got home buyers out there that feel like they've got the ability to kind of slow down their search and find the homes and maybe negotiate those if there's kind of that balance of homes to listings. Will we get into a buyer's market this year? It doesn't look like it. Unless for some reason, again, if interest rates continue and we don't see the inventory replaced, once we start to see homes start to sell, a lot of home sellers out there are probably going to come back on the market or come on the market that we're waiting until a little bit better market and say, this might be my best opportunity this fall. So, and that might be the second best message of the year or of this week's show is that don't discount the last 4 months of any year. This is really a good time to be a home buyer, and home sellers sometimes can take advantage of that as well by jumping into the market and taking advantage of excited and encouraged home buyers out there. So we'll watch that as well. As far as closed sales go, we did hit the milestone this past week on September 5th. Yeah, it was earlier this week. You can see that it took us 26 days to close that gap between 8,000 and 9,000 closed sales. I'm sorry, not, yeah, this is the number of days it took last year was 23 days, 20 days. Back in 2020, it only took us 2 weeks to hit that date. This year, it took us over 3 weeks. And if you look over here to the far left, you'll notice that, the years 2009 through 11, and actually before that, we didn't even hit 9,000 closed sales. So it's only been since 2012, the last 12 or 13 years, that we've actually even closed more than 9,000 sales here. So that's a pretty good sign that our market continues to grow. As far as year-to-date closed sales go, we are currently 195 home sales behind last year. We're at 9,093 as of this weekend. We're probably going to see, if at the same pace here, if you draw this straight line across, we'll see here probably in another 3 or 4 weeks, we'll see 2 or 3 weeks maybe, we'll see us hit that 10,000 number all the way and close somewhere around that. What is it? Right around that 11 or 12,000, maybe 13,000 closed sales for the year. It's going to be a tough year to hit to make this into a record-breaking year versus the previous year. I think that's going to be hard to do, but again, things can happen and we can see a surge this year. Okay, I'm going to end the show here this week with 2 or 3 slides about sale prices, because really it all comes down to affordability when you think about it. It doesn't matter what rates are doing. It doesn't matter what the economy's like. We want to make sure that home buyers are going to base their decision on purchasing homes based on whether they can afford the home or not, because they're still going to buy a home. Not all of the home buyers are going to jump out of the market. This is a graph showing you all the homes on the market, including new construction, condo townhomes, the resale properties in both of those categories, as well as single family. And you can see that our median sale price has outpaced every single week this year until this past week. We have actually gone below 2023's median sale pricing. And so we've kind of seen the last 3 weeks see this little stair steps down. And this might be a sign, again, if interest rates don't come in and affect things, this could be a sign that the homes that sold in the last 60 to 90 days are actually selling below the pace and the numbers that we were seeing in the past years. And we could actually end the year at or below the median sale prices for the rest of this year. That'll be an interesting number to see. It's going to be a welcome sight to home buyers. And it also is going to send a message to home sellers out there. They've got to really kind of watch their pricing. And so if we kind of break this down now and look at existing home sales are actually holding a little bit tighter. We did not go below. There was only a couple of weeks there right after July, 1st of July, that we actually started to see maybe where we were going to maybe start to go below. But existing home sales have stayed above the median sale price from a year ago. We're currently at just under 277,000 is our median sale price this past week. And you can kind of see that trending is not really going down. It's slowing a little bit, but not out of the ordinary compared to last year. Where the change is really happening here, and this is interesting, is new construction, new homes. This is not new condos, but this is the new single-family homes median sale pricing. And currently today, the median sale price was just under $379,000, which is about 90,000 from the up from the existing home sale prices. So that's kind of the spread, that 90,000 between existing homes and new construction. But what you can kind of see is that the trending shows as we get near the end of the year, we'll see median sale prices rise. And why is this? It's because many of these homes that are going to be closing as we get into that fourth and final quarter of the year were sold in the spring and summer markets. And so new construction takes a much longer period of time to close just because obviously they're building the houses. And so as we move into the last quarter of the year, this is why we typically will see median sale prices rise for new construction. However, you can see that the sale prices of new construction homes throughout most of the year, only a few weeks here that happened in just before the first quarter, second quarter ended, which would have been sales from the first half of the year, early 2024, were actually above the last year's median sale pricing. Um, I think that it's just going to be interesting to see if, as we move into the fourth quarter, as these sales start to close, if we're going to see that same kind of a jump here. So anyway, that's kind of the show this week. Again, note the graphics or the differences there. Let's see. Let's go back to this slide here. Again, that's kind of the show this week. I'm not trying to say the sky is falling at all. Please don't. I hope you don't come away from this show feeling like I'm out here being Chicken Little, saying, "Oh my God, the sky is falling. There's things to be scared about." It's just I'm just trying to read the tea leaves here, just trying to figure out what we're seeing in the marketplace and kind of look at what we've seen in past history and kind of where we expect things to go from there. So anyway, that's the show this week. Thanks for joining me. We'll see you all again next Sunday. Please be sure and hit that subscribe button. That really helps me out. I'd like to get my subscriptions up even more this past week, and you can do that by simply hitting that subscription link here on the show as well. So, all right, guys, take care. Enjoy the cooler weather. Go Hawks. Go Cyclones. Tough loss for the Hawks this week. Cyclones, good job. You came through and did what you're supposed to. We'll talk to you later. Have a good week.